$36 billion in tokenized assets worldwide. And yet in Europe, only 4 authorized operators in 3 years. That's not growth. That's regulatory failure. And that's exactly why Europe is changing the rules. The DLT Pilot Regime was launched as Europe's flagship proposal for tokenization. 3 years on, the result speaks for itself. Thresholds are too low, eligible assets far too limited, and trading volumes practically non-existent. Meanwhile, outside the EU, tokenization is moving at a completely different pace. Only 4 operators have been licensed across the entire European Union: SDX, 21X, 360X, and Securitize, the latter authorized by the CNMV in November 2025, which is the only Spanish case to date. The problem isn't the technology, it's the regulatory framework. The DLT pilot regime thresholds were so restrictive that most viable issuances fell outside the scopes. ESMA itself acknowledges this in its June 2025 report, with 3 clear recommendations. Make the regime permanent, raise the thresholds to include complex and illiquid assets, and remove per-infrastructure caps. While Europe was still debating, the global market for real-world asset tokenization grew to $36 billion. BlackRock, Franklin Templeton, and JP Morgan are issuing tokenized bonds under entirely different conditions. Projections point to trillions by 2030. The question isn't whether tokenization works. It's whether Europe is going to participate or regulate from the stands. What nobody's telling you is that the underwhelming performance of the DLT pilot regime doesn't discredit tokenization, it actually validates it. The market's growing exponentially outside the EU, and Europe knows this. And that's precisely why Europe is about to open the rules. The opportunity for those who position themselves now is enormous, precisely because almost nobody has done it yet. Essentially, tokenization is advancing. The only question is whether Europe leads or simply follows.